Okay. So for our lecture this afternoon class, we will be tackling about the recognition of your property, plant, and equipment. Again, your property, plant, and equipment is governed by PAS 16. So we will be discussing the recognition, meaning we will address the question as to when an item of property, plant, and equipment can be recognized as an asset. And in relation to the recognition rules class or principles in relation to property, plant, and equipment, we will also be discussing about the initial measurement for your property, plant, and equipment. Okay, and this is not the first time you should be encountering the term recognition class. If you'll remember in the discussion for in the conceptual framework, there is a chapter dedicated for recognition. The recognition, I told you that all the other standards that govern a specific element of the financial statement, a specific asset, liability, income, or expense, will tell you as to when a particular asset, liability, equity, income, or expense will have to be recognized. Okay, but even then, class, I did not tell you this before. When you go over the other standards class, the criteria as to when an asset will have to be recognized class would be very similar or common. Okay, normally you will have two criteria, and that is letter A and letter B in paragraph 7 class. Meaning, a property, plant, and equipment shall be recognized as an asset if and only if, letter A, it is probable that future economic benefits associated with the item will flow to the entity and the cost of the item can be measured reliably. Not just in PAS 16, if you go back also to PAS 2 class, very similar and to the other standards that govern specific assets and liabilities. The criteria for recognition of the asset or liability is very common. You will have two common criteria: probability of the economic benefits and the cost can be measured reliably. I try to remember this by just remembering probable and measured reliably class. Okay, so two common criteria for recognition would be it must be probable and it can be measured reliably. The cost can be measured reliably. Okay, and that's basically what you will have to remember class, not just for PAS 16, not just for PAS 2, for all other standards that govern specific assets and liabilities. As to the other parts of this section of the standard class, I have underlined certain portions here, which are not really crucial in our establishment of your foundation class or basic knowledge on the preparation of financial statements, but we will go over them as they are good candidates for multiple choice question. Okay, I hope at this point you are already aware that most of the times, even though the question in the examination is a multiple choice type, the question basically asks you to determine whether certain statements are true or false. The questions would rarely be phrased this way: which of the following statements is true, which of the following statements is false. So really, as you go over the standard classes, you read the standard, one of your goals would be to be able to pick out certain portions, certain provisions that can be a candidate for a good true or false question. Okay, so paragraph 8 here class tells us that items such as spare parts, standby equipment, and servicing equipment are recognized in accordance with the standards when they meet the definition of property, plant, and equipment. Otherwise, such items are classified as inventory. Okay, but this is not the same inventory that are held for sale class. Okay, when the standard mentions inventory here, it pertains to supplies inventory. Okay, you can have different types of inventory. This may be used, you can have your factory supplies inventory or office supplies inventory. Okay, not necessarily those that are used in production classes. Okay, so if you have spare parts that have a useful life of 1 year, only then should it be more than 1 year, only then should it be considered as a PPE. Okay. If we will recall the definition of your property, plant, and equipment, aside from the fact that it should be used in the production or supply of goods or services, or it is used for rental to others or for administrative purposes, an important part of the definition class for a property, plant, and equipment is that it is expected to be used for more than one reporting period. Okay. So if the expected use is less than 1 year class for your spare parts and your standby equipment, then it cannot qualify as a property, plant, and equipment. Okay. So if you have a standby equipment that is expected to be used only for 1 year, then it will not be classified as an item of your property, plant, and equipment. It will just be considered as part of your supplies because, again, you only expect to use it for a period of less than 1 year. Okay. Last part of paragraph 10 class, the cost of an item of property, plant, and equipment may include costs incurred relating to leases of assets that are used to construct, add to, replace part of or service an item of property, plant, and equipment, such as depreciation of rights of use of asset. Okay, if you can recall, class, your past two, if you can remember as to what we will consider as inventoriable cost, in determining the product cost, it's possible that the value of your production assets, the value of your factory equipment, your machines, will become part of your product cost. Okay, if you have depreciable assets class that are used in the production, then the depreciation charges on these depreciable assets will form part of your product cost. Okay, in the same concept class, if you have these assets that relate to an item of property, plant, and equipment, the depreciation charges or other costs related to those assets can form part of the cost of an asset. Okay, at this point, class, it's very important for us to know as to what costs will form part of the carrying amount of the asset. Okay, when we say recognition class, it means we will assign a value to this asset and recognize it in our books. We will give it presence in our books. Okay, and if you go back to paragraph 7, it starts with the phrase the cost of an item of property, plant, and equipment. Okay, so if there is no cost involved, then there is nothing to recognize class. Okay, so it is the cost of an item of property, plant, and equipment that will be recognized as an asset. Okay, and basically paragraph 10 tells us class, paragraph 10 tells us as to what can form part of the cost of an item of property, plant, and equipment that will be recognized in our financial statements. Okay, so again, I am just highlighting this part of paragraph 10 because it might be a good source for your true or false statements. Okay, and it's possible for you to think that this cost, the cost of an item of PPE, those that are relating to lease of assets that are used to construct, add to, or replace an item of PPE will not be part of the cost of your property, plant, and equipment. You might think that if I am talking about the cost of another asset, then that cost should not form part of the cost of my PPE. Okay, but if the reason those costs are incurred class because of the construction or the addition or replacement of an item of PPE, it would make sense that it will be part of the cost of your property, plant, and equipment. So when you are asked class what will form part of the cost of an asset, the recurring answer would always be any and all costs necessary to bring an asset to its intended use, location, and condition. So very similar to our inventoriable cost class, because basically inventoriable cost is also a specific kind of your capitalizable cost. Okay, so although the standard class does not phrase it this way, okay, but capitalizable costs would revolve around those that are necessary and unavoidable, those that cannot be avoided in bringing the asset to its intended use, intended location, and intended condition. I try to remember this class by the phrase "u loco." U stands for use, lo stands for location, and co stands for condition. So those costs that are necessary and unavoidable to bring the asset to its intended ULOCO, its intended use, location, and condition, they will be part of the cost of an asset. Okay, so you will be asked what will form part of the cost of an asset. So basically, you are being asked which of these costs are considered as capitalizable. Okay, so capitalizable costs again are those costs that are capitalized or included in the cost of an asset. Okay, so when you will recognize an asset class, there has to be a valuation involved. Okay, and what costs will be recognized as part of the value of the asset? Then this would be our capitalizable costs that are included, that will be included in the cost or the carrying amount of an asset. Okay, and again, it's understandable if you find this concept familiar, because basically this is capitalizable cost is inventoriable cost is similar to your capitalizable cost. Okay, it's just that when we talk about inventoriable cost, we are talking about capitalizable costs in relation to inventory. So the broader phrase is your capitalizable cost. A specific kind of capitalizable costs would be your inventoriable costs that form part of the cost of your inventory. Okay. Now, at this point, it's important for you to be aware that the opposite of your capitalizable cost class would be your period cost. Okay, period costs are costs that are reported as an expense in the period in which they are incurred. Okay, for you to be able to easily visualize class the difference. Okay, when a cost is being capitalized class, it is not reported as an expense. Okay, it will form part of the cost of an asset, and it will only form part of our income and expenses if we continue to use the asset. Okay, we will recognize depreciation, or later on when we dispose the asset class. Okay, whereas your period costs class will automatically be recognized as an expense. They will be reported as an expense in the period that they are incurred. Again, that's the definition of your period costs. Costs that are reported as an expense in the period in which they are incurred. For our capitalizable cost, the moment they are incurred, they are not yet reported as an expense. They will still be they will be reported as part of an asset. Okay? And the cost of the asset, which includes these capitalizable costs, will be spread out throughout the useful life of the asset. Okay? So capitalizable costs forms part of the cost of an asset. And this cost class, as I mentioned, will eventually end up as expenses, but it normally happens in subsequent periods. Okay, so very simple distinction. Period cost class automatic, it will become an expense in the period in which they are incurred. Capitalizable cost, initially not yet an expense. They will form part of the cost of an asset, but ultimately they will eventually become an expense, normally through depreciation expenses. Okay, and just to remind you, the reason why we spread out the cost of an asset, of a long-term asset, is to conform to the matching principle. Okay, our financial statements would be very misleading if significant costs are reported as an expense outright. Okay, if all costs are reported as an expense outright, even though the benefits that are derived from such cost go beyond 1 year. So if the cost class will benefit the entity for 10 years, then it is just logical and understandable why we should also spread out the related cost throughout the same period. Okay, we will elaborate this one during the discussion on depreciation class. Now, which leads us to initial costs class. Okay. So here, items of property, plant, and equipment may be acquired for safety or environmental reasons. The acquisition of such property, plant, and equipment, although not directly increasing the future economic benefits of any particular existing item of property, plant, and equipment, may be necessary for an entity to obtain the future economic benefits from its other assets. Okay, so normally class, the initial cost of our asset class in the initial recognition would be the directly attributable costs. Okay, but again, if there are other necessary costs class, then they can also form part of our initial cost. Okay, the amount that we will initially recognize for our property, plant, and equipment. Okay, but again, what you are expected to remember class as part of your foundation or stock knowledge would be that it should only be directly attributable costs that can be capitalized. Okay, and that is why there is a general rule that only initial costs can be capitalized. When we say initial costs, these are costs incurred upon purchase, okay, upon acquisition, or upon construction of an asset. And it should make sense, because how can it be considered as a directly attributable cost to bring the asset to its intended use, location, and condition when it is a cost that is incurred only after the asset has already reached its intended use, location, and condition? Okay, I hope that makes sense to you. Generally, class, the rule is only directly attributable cost will form part of the cost of an asset. Okay, and the question now is what can be considered as those directly attributable costs? Okay, so the general rule is that only initial costs can be considered as directly attributable costs, because again, the logic here is if we're talking about subsequent costs, it does not make sense that these subsequent costs can be considered as a directly attributable cost, can be considered as a necessary and unavoidable cost. Okay, because how can it be considered necessary? How can it be considered unavoidable when it is only incurred after the asset has already reached its intended use, location, and condition? So the general rule is what will generally form part of your directly attributable costs, what will generally form part of your capitalizable costs, it would be those that are incurred upon the purchase, acquisition, or construction of the asset. It will generally be your initial costs. But we have an exemption class. Okay, subsequent costs may be capitalized when they increase or improve the life, the performance, capacity, and or efficiency of an asset class. Okay, so again, general rule is only initial costs can be considered capitalizable, can be considered as directly attributable cost, can be considered as necessary and unavoidable in bringing the asset to its intended use, location, and condition. But as an exemption, even costs that are incurred after the asset has already reached its intended use, location, and condition can be capitalized, can be added to the carrying amount or cost of the asset if these subsequent costs class can increase or improve the life. Okay, instead of 10 years useful life, it becomes 15 or whatever. Okay, if it increases or improves the life, the performance, instead of being able to produce 10,000 kilos per month, it is able to increase it to 12,000. Okay, increase in capacity class and efficiency of the asset, then these subsequent costs can be added, can be capitalized, can be included in the cost of the asset. Okay, general rule, initial cost only initial cost can form part of the cost of an asset, can be considered as capitalizable, can be considered as directly attributable costs. Okay, but again, if you have a subsequent cost that can increase or improve the life, performance, capacity, and efficiency of an asset, then these costs can be included as part of the cost of an asset. Okay, the general rule class is the way it is because normally, again, subsequent costs that are incurred after the asset has reached its intended use, location, condition are only for the preservation of an asset. Okay, if you have subsequent costs, normally class subsequent costs are only for maintenance, for repairs, and are therefore treated as period costs, are therefore recognized as an expense in the period in which they are incurred. They are not considered as capitalizable cost. Okay, so again, general rule for subsequent cost class, they are to be expensed because again, normally they are only for the preservation of the asset. Okay, just for the smooth running of the asset, your equipment or your machinery. Okay, but the moment they are able to increase or improve the life, the performance, capacity, and efficiency of the asset, then they can be considered as capitalizable cost. Okay. There's an example here, class. A chemical manufacturer may install new chemical handling processes to comply with environmental requirements for the production storage of dangerous chemicals. Related plant enhancements. The related plant enhancements are recognized as an asset because without them, the entity is unable to manufacture and sell chemicals. So it's very common, class, that if you have to incur additional cost to comply with regulation, class, in order for you to be able to operate, then obviously that will be considered as a necessary cost and therefore part of the cost of the asset. Okay, we've touched already on the rule for subsequent costs. An entity does not recognize in the carrying amount of an item of property, plant, and equipment the costs of day-to-day servicing of the item. Okay, again, the provisions here that are being underlined, class, are again important things to note as they are commonly asked as a true or false question. Okay, costs of day-to-day servicing are primarily the costs of labor and consumables and may include the cost of small parts. Okay, the purpose of these expenditures is often described as for the repairs and maintenance of the item of property, plant, and equipment. So measurement at recognition, class, or our initial measurement. Okay, class, if you're only able to remember one thing from everything that I have discussed so far, class, let it be this: that an item of property, plant, and equipment that qualifies for recognition as an asset shall be measured at cost. So if you are asked, class, how is PPE initially measured? Okay, there is only one answer. Okay, property, plant, and equipment is initially measured at cost. Okay, so if you are only able to remember one thing from everything that I've discussed, let it be the initial measurement of your property, plant, and equipment. And again, property, plant, and equipment is to be initially measured at cost. Okay, and if I can negotiate, class, please try to remember two things. If you are only able to remember two things, class, include the subsequent measurement for property, plant, and equipment. Okay, the first thing, again, if you're only capable of remembering two things: number one, initial measurement. What is the initial measurement for property, plant, and equipment? It is to be measured at cost. Second thing, class, that you will have to remember, subsequent measurement. How are how are property, plant, and equipment subsequently measured? They are subsequently measured, class, by using either, you have two options. Okay, you can remember in the discussion on conceptual framework, I told you that it's possible that standards will offer you options as to how to measure assets, liabilities, income, and expenses. So here, PPE's initial measurement, no option, only one rule: measure it at cost. Subsequent measurement, entities are given two options: either to use the cost model or the revaluation model. Okay, this is somewhere down in paragraph 29. You will subsequently measure property, plant, and equipment using either the cost model or the revaluation model. Okay, but for initial measurement, class, again, please do not forget, it is to be initially measured at cost. Okay, and paragraph 16, class, is asked a lot of times. It will come out in a lot of examinations, class. Okay, so what will form part of the cost of an item of property, plant, and equipment? You will have the purchase price, import duties, non-refundable purchase taxes, any costs directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by management. This is what I meant by intended use. Okay, so A and B should be familiar, class, okay? And you should have also encountered them in past two. What's new here is your letter C, the initial estimate of the costs of dismantling and removing the item and restoring the site on which it is located. The obligation for which an entity incurs either when the item is acquired or as a consequence of having used the item during a particular period for a purpose other than to produce inventories during that period. No need to memorize this, class, but just be familiar that initial estimate for costs of dismantling at the end of the use of the asset will be part of the initial cost. Okay. Letter C is noteworthy, class, because we are talking about an estimated cost that will only be incurred at the end of the useful life of the asset. Okay, because this is cost of dismantling or removing. So this will be incurred at the end of the life of the asset. That is why we are only using estimated cost. Okay, but even though this is a cost that is expected to be incurred at the end of the life of the asset, we make an initial estimate upon initial recognition, and it will already be part of the initial cost of the property, plant, and equipment. Okay, and 17 and 19 here, class, would be a good source for a multiple choice question. Which of the following shall be part or not part of the cost of your PPE? Okay, so you have here examples of directly attributable cost. Cost of employee benefits. So if you are constructing your own asset, the salaries given to the employees working on the asset will be part of the cost of the asset. Cost of site preparation, initial delivery and handling cost, installation and assembly cost. Okay, and this should make sense because these are necessary in bringing the asset to its intended use, location, and condition. In problem-solving questions, class, you will just be given a list of costs, and you will be asked how much of these costs will be part of the cost of the asset. Okay, so it's good that you will make yourself familiar with the enumerations provided in 17 and 19. Okay, the enumeration in paragraph 17 will be included. Paragraph 16 and 17 will be part of the cost of the asset. Paragraph 19 will not. Okay, examples of costs that are not costs of an item of property, plant, and equipment are cost of opening a new facility. Okay, parties, class, for grand or soft opening, definitely not a necessary cost. Okay, cost of introducing a new product or service, cost of conducting business in a new location, and administrative and other general overhead costs. Okay, especially for paragraph D, class, this is also similar to what you should have encountered in past two. Okay, recognitions of costs in the carrying amount of an item of property, plant, and equipment ceases when the item is in the location and condition necessary for it to be capable of operating in the manner intended by management. Okay, this paragraph here, class, just supports our discussion earlier, why it makes sense, why subsequent costs will generally be not part of the cost of the asset. Okay, costs incurred in using or redeploying an item are not included in the carrying amount of the property, plant, and equipment. Okay, so paragraph 20 gives us additional examples, class, of costs that are not to be part of the cost of the asset. Okay, initial operating losses. I hope this is familiar. Again, cost of relocating or reorganizing part of the entity's operations. These are not necessary and unavailable costs, class. Okay. So please take note that this would be a potential multiple choice question. Okay, because incidental operations are not necessary to bring an item to the location and condition necessary for it to be capable of operating in the manner intended by management. Plus, if you'll take note of how it's worded, class, it's very long, so that's why I just resort to intended use, location, and condition. Okay, but the takeaway here is that the income and relating expenses of incidental operations are recognized in profit or loss and included in the respective classifications of income and expense. Okay, basically it's just telling us that it will not be part of the cost of an asset. It will already be reported as an income or an expense. The cost of a self-constructed asset is determined using the same principles for an acquired asset. If an entity makes similar assets for sale in the normal course of business, the cost of the asset is usually the same as the cost of constructing an asset for sale. Any internal profits here, this is asked quite often. Any internal profits are eliminated in arriving at such costs. Similarly, the cost of abnormal amounts of wasted material, labor or other resources incurred in self-constructing an asset is not included in the cost of the asset. Again, nothing extraordinary here. Okay, one point we have to remember is that when the cost you incurred to make your own asset is lower than the amount you would have paid had you purchased the asset class, the supposed savings will not be recognized as an income. Okay, so again, there is an asset that you constructed on your own. It is available in the market at a price of 1,500,000, but you were able to construct it only at a cost of 1,300,000. The asset will be reported at 1,300,000 because that is the cost that you have incurred to construct the asset. Okay, but you do not you ignore the 1,500,000 market price. You do not say the price in the market is 1,500,000, but I was only able to spend 1,300,000, so there is a savings of 200,000. So I will recognize an income of 200,000. That's wrong. Okay, you should not treat your savings as an income class. Do not recognize your savings as an income. Okay, because you did not receive anything. There's no reason for you to. There is no reason for you to recognize an income. Inversely, class, if you have incurred excessive costs, abnormal amounts of wasted materials, labor, and other resources in constructing the asset on your own, then the abnormal amounts should not be part of your, the excessive amount should not be part of the cost of the asset. The excess will now be reported as an expense on your part. Okay, remember, necessary and unavoidable. Okay, similar to the discussion in past two. If it is excessive, if it is at abnormal levels, then definitely that is not necessary, that is not unavoidable. Okay, so the excessive amounts will be reported as an expense. The cost that will be part of the carrying amount of the constructed asset will only be at the normal amount, normal levels of materials, labor, and overhead. Just absorb this one. Plus, bearer plans are accounted for in the same way as self-constructed items of property, plant, and equipment before they are in the location and condition necessary to be capable of operating in the manner intended by a management. Okay, just very quickly, class, let's go over as to the measurement of cost. Okay, after identifying what cost will be considered as capitalizable cost, class, the next would be to measure these costs. Okay, so the provision in the standard is very straightforward, class. The cost of an item of property, plant, and equipment is the cash price equivalent at the recognition date. If payment is deferred beyond normal credit terms, the difference between the cash price equivalent and the total payment is recognized as an interest over the period of credit. Okay, the takeaway here, class, is that if you are given a payment term, okay, you do not have to pay everything up front, then the amount that will be recognized as an asset would be the amount or the price, assuming there was no interest component. Okay, what you expect to happen, class, is that if you are given a payment term, the price would be generally higher, okay, compared to when you pay it upfront. Okay, if you pay in cash and in full today, the price is this much. But if you avail of installment, the price is higher. Okay, you're not really getting a discount, class, for paying in cash. The true price of the item really is the price if you pay it in full and in cash upfront. So the difference then, the increase in the price if you avail of the installment term, class, actually represents interest class, and that is how we are going to account for it. Okay, if you've gone through to appliance stores class, they would tell you that the price, let's say 20,000, but if you pay in cash 18,000, okay, the true price of the item is not really 20,000, it's actually 18,000. Okay, but you will be paying 20,000 because of the installment term class. The true price or value of the asset is actually just 18,000. Okay, so that's how accounting view it class. Even though when you go to the stores, they will tell you that the price is 20,000, but if you pay in cash, it will be 18,000, meaning you have a discount of 2,000. We do not see it as a discount class. The difference there actually represents interest, okay, for availing of an installment term. Okay, the true price would be the true price would be the cash price equivalent. Okay, that's basically what this tells us. Another way class in which we'll be able to acquire an asset is through an exchange. Okay, exchange or barter of assets class and trade-ins are a big area for discussion class, but they are better presented through problem solving. Okay. Again, there will be a lot of problems involving acquisition of an asset class wherein you will not pay cash, but you will give up another asset on your part. Okay. Basically, paragraph 24 tells us that in that case, the asset that we will be receiving will be measured at its fair value. Okay. And because we will be derecognizing, we'll be removing from our records the asset that we are exchanging for it, then the exchange may result in gain or loss. Okay, but paragraph 24 tells us class that the rule is to measure it at fair value. The rule is to measure it at fair value class. Okay, unless the exchange transaction lacks commercial substance or the fair value of neither the asset received nor the asset given up is reliably measured. And in this case, the cost is measured at the carrying amount of the asset. In this case, there will no longer be gain or loss on the exchange class. Okay, whatever was the carrying amount of the asset that we have given up, that would already be the carrying amount of the asset that we have acquired. That is if the exchange transaction lacks commercial substance and or the fair value of neither the asset received nor the asset given up is reliably measurable. Okay. Again, it's okay that if you cannot fully comprehend this one, what is expected from you is that if you are asked at what price will an asset acquired through an exchange, at what cost will an asset acquired through an exchange be measured, your answer would be at fair value, unless, general rule is fair value, unless if the transaction lacks commercial substance or the fair value of the asset given up or the asset received could not be measured reliably. Okay, and having learned that class, the next question you should ask would be when then does a transaction lack commercial substance? When then does a transaction lack a commercial substance? And paragraph 25 helps us class. Okay, so if it will not result in a significant change in the cash flows of the entity, then that means it lacks commercial substance. Okay, so paragraph 25 would be a good source for a multiple choice question. Okay, so if it lacks commercial substance class, then it will be at carrying amount if fair value is not available. Okay, but if it has the transaction has commercial substance, meaning it will result in a significant change in the cash flows of the entities, then it will be measured at fair value. Okay, paragraph 28 may be a good source for a true or false question, but more often than not, this would be asked in conjunction with PAS 20, the standard on government grants and government assistance. Okay, so that will be all class for recognition and initial measurement. I will share to you the other discussions on PAS 16. You may work on the